Hello, my friends. How has everybody been? It is a glorious Tuesday today. It's been a few weeks since we've uploaded any video. We've just been relaxing after the election. Let everything kind of cool off in the markets. Everything calm down. Everybody needs to calm down. And now we're getting back into checking on things that we're interested in. And how about this, my friends? Five Below. $100 now. How about them apples, my friends? That is gorgeous. That is gorgeous. I mean, we are already like a third of the way to our $165 take profit area that we've been eyeballing for the past 2 months. That's how slow swing trading can be. You want like big money, you just gotta be patient and just wait for your big nice move. Your big giant move isn't gonna come in a week. It's gonna take a few months. It might even take a year. But that $65 area was a beautiful area to get in. We got in about 73 is when we were first talking about it and looking at this could be a potential here to come back up. And man, what a beautiful move. It's just looking gorgeous. It actually got up to about 121 within the past couple weeks, and now it's having a slight pullback. But for me, there's no reason to panic, you know. Right now, I'm just remaining calm. I had my stop down there at $64. Now, I'm probably going to move it up, honestly. Move it up to like $75, a little bit in the green. So, at this point, it doesn't matter what Five Below does. Whether it goes up to 165 or whether it goes back down to 73, we're still going to make money on this. So, this beautiful maneuver, this stock has paid us regardless. And it's nice to see that happen. We have got to check on, I was looking at Dollar General recently, cooling off at $72, $75 range. You know, zooming out even bigger, this is a very zoomed out chart here, but look where we're at right now. We're at this nice area down here, 75. This is a beautiful, beautiful area to start getting in at. NFA, there's never financial advice on here. I'm just talking to myself, you know. At the very least, you know, if you're buying some Dollar General now, you know you're not buying the top. The top was like $250. You know, you're not buying up there. You're buying at a discounted price. Oh, well, what if it goes down to $30? Well, that's an even more discounted price. But $75 is a discount at this point, as far as the chart's telling us. And see right here, this is interesting. It's a previous area of consolidation way back in 2016. Okay, that's 8 years ago. And we're now visiting the prices that we were back in 2016. So you see how, like, a lot of things you say, man, I wish I could have bought that stock back in, 2012. Or I wish I could have bought that stock back in 2020. Well, looky right here, Dollar General, big company. Stores everywhere. Right now, it's giving you the opportunity to buy it at 2016 prices. It just made a nice little round trip maneuver. This is like a made up thing that I have on my own. I call them round trips. Okay? So it starts at one point, it goes up and away or down and away, and it returns back to that same point. Round trip. This is like my own speciality I have of looking at these round trips and just saying, okay, well, probably just going to go right back there. So we're right back there. If you're upside down on Dollar General, say you were buying in the $100 valuations, 120, 130, 150, and now you're underwater, okay, but you have conviction that Dollar General is going to be around for a long time. This is just an opportunity to average out your price, okay? So if you bought $1,000 worth at, let's say, $125 per share, you bought $1,000 worth, and then now it's $75 a share, you spend another $1,000, okay? Your average price that you bought, you didn't buy Dollar General at $125 a share, because you averaged it out by buying more now at a discount. You've brought your average down to $100. So now your average price is $100 a share, if that makes sense. So you don't have to wait for price to go all the way up to 125. It can just come up to 100 and you're perfectly break even. You haven't lost anything, you haven't made anything. It's just another way to kind of add to your long-term plays. You know, but Dollar General is looking good macro to me. Sure, it could come down a little lower. Why not? But right now, it looks beautiful to me. I'm really digging Dollar General right now. But just a little quick recap. I hope everybody's been well. I just wanted to get out off my chest a couple things. Five Below was looking, that, I really thought pound dollar was going to be my pick of the year or my personal trade of the year for 2024. It was not. Five Below is turning out to be my stock of the year as far as looking so good. 2025, I got a couple things cooking. You know, I got a big pound dollar trade going on. We've talked about that. And also in 2025, there could be some potential setup on AUD USD, Australian dollar, US dollar. It's playing with the 63 cent evaluation right now. And if you remember, you know, it was like, you know, for majority of the past several years, it's been hanging around the 70 cent area. So there's no reason why we can't revisit that 70 cent area. So I've been looking at that. And Alcoa's another gorgeous one that I'm very much interested in. Let's see. Oh yeah, still holding at 38. So Alcoa is unchanged, okay? So for like the past few months, well, you can see those little yellow scribblies. You see where we were looking at it? Look at that. Look at how gorgeous that is. That's the last time we were looking at Alcoa. We were looking at it down here at the $28 area. And look at that beautiful move it made up. Nice. So we're looking in the money right now on Alcoa. But we're still at the bottom of the big range, you know. We're still at the bottom of this big range. I know somebody had commented on my last Alcoa video. This was like a couple months ago. They were like, man, that's ridiculous what you're talking about. This is just how I view things. This is a personal open book journal, okay? I mean, calm down, my friend. I love negative comments, but I thought it was kind of silly, you know. What plays for you might not play for me. What plays for me might play for you, but I enjoy Alcoa. It is looking very good. And Alcoa, ultimately, I'm holding indefinitely. Probably for the majority of my life. I'm not going to lie. There's a reason to it. Because this company, they're not scared to grow. Okay? They've been growing steadily. They're not scared to grow. and they've been gobbling up mining shares and smaller mining companies. They're becoming something greater than I think what people give them credit for. So it's kind of my 2 bits on that company. And we love everybody, and we will talk to everybody on the next video. Enjoy your holiday season coming up. Peace.